Recession risks are on the rise.
Risk of recession.
Real risk that we're going to see a slowdown.
This slowdown that we're witnessing in the global economy is coming quicker.
We have economic sentiment so weak.
What concerns us, I think, the most is really the incredible strength of the bonds.
The yield curve is inverted,
which in general economists consider to be a very strong recessionary signal.
And that's been an infallible indicator of a recession.
Technical recession.
Odds of a global recession have really risen.
20% probability,
25% chance
that we get a U.S. recession in the next 12 months.
And a giant dark cloud has taken its new place on the horizon as potential big trouble for the Trump economy. The stock market posted its biggest decline of the year as a key predictor of recession is now flashing for the first time since 2007.
Markets are tumbling today amid new fears that a global recession could be in the near future. The Dow Jones down more than 700 points. The drop is due to warning signals from the international bond market. It also comes as U.S. mortgage debt reached a record high last quarter, exceeding the levels from the peak of the 2008 financial crisis.
This morning, Wall Street reeling after the worst day for stocks this year, with fears of a possible recession looming. The Dow plunging 800 points, down more than 3% Wednesday. Investors rattled by the escalating trade war with China, negotiations at a standstill, and fears of a global slowing economy. And now a new warning sign, what's known as an inverted yield curve, when the yield, that's the interest rate, on the 10-year Treasury is lower than the 2-year, meaning investors get paid more to own the shorter-term 2-year investment than they would for taking a longer-term risk. The move, which happened briefly Wednesday, typically signals a recession is coming in the next 22 months. The last time it happened was 2007, just before the Great Recession.
The economy, Americans saw a big chunk of their stock market savings disappear yesterday over fears of an economic recession. The Dow Jones Industrial Average fell 800 points. That's the biggest drop of the year, more than 3%. This morning's market futures predict another decline at the open today. Don Dahler is at the New York Stock Exchange. Don, what is it that's making investors so nervous?
Hey, good morning. Well, it's something called an inverted yield curve in the bond market.
When markets get shaky, investors and economists start talking about the yield curve.
You know, the flattening yield curve has been kind of an overhang.
Inverted yield curve. Yikes.
Inverted yield curves can often, but not always, predict a recession.
The reason? When the curve inverts, investors see it as an omen for an economic recession. Just look at this chart. Every time the yield curve dips below zero, a recession follows.
Look, I think all you need to say to people is the last time that we saw a yield curve inversion was 2007.
Right
and they
before
know
the recession.
They know what that means. When we say, though, let's just say for argument's sake, the yield curve is correct and it is indicating a recession. That doesn't mean tomorrow that we're in trouble.
No, in fact, the average is about 22 months.
Okay.
Yeah, well, first of all, you have to understand that everything that the Federal Reserve has done since the 2008 financial crisis was a mistake. And all they did was succeed in making all the problems that caused that crisis worse. Now, they covered it up by inflating an even bigger bubble than the one that popped in '08. But by trying to normalize interest rates, by trying to shrink their balance sheet, they pricked that bubble. And now we're going to complete the economic crisis that they interrupted in 2008, except the back half is going to be much worse than the front half.
In what way? So what do you think or what do you predict is going to happen next?
Well, we're headed for a recession. It's going to be worse than '08. The Fed is going back to zero. They're going to do QE again. It's going to be bigger than the first 3 rounds combined, but it's not going to work. The Fed is done inflating asset bubbles. All the inflation is going to go to the supermarket and the gas station. It's not going to go into the stock market. The dollar's going to go through the floor. It's going to take the bond market with it. And the next crisis is not subprime mortgages. It's going to be in the Treasury market.
Speaking of money, speaking of the Pope is going to talk about it. He has been vocal in the past about creating a global economy that works for everyone, the need to address inequality as well. Oddly enough, after visits by popes in the past, 3 visits came shortly before major stock market downturns. Pope John Paul, 1999, the tech bubble was forming then. Pope Benedict in the spring of 2008, right before the credit crisis. Now Pope Francis visits.
What on earth is going on at the Vatican? Pope Francis has personally approved a new document from the Office of Catholic Doctrine, no less. He rails against money, capitalism, offshore tax havens, and all financial markets. He says a new global public authority is needed, a central world bank to regulate money all over the planet. That's pretty strong stuff.
Rende un servizio al bene comune se rimane legata all'etica, che è misura universale dell'autentico bene umano.
And I have been enormously impressed by Pope Francis speaking out and his visionary views about creating a moral economy, an economy that works for all people, not just the people on top. And what he has said over and over again, we cannot allow the market just to do what the market does. That's not acceptable. We have got to ingrain moral principles into our economy.
The Pope is playing a historical role, coming at exactly the right moment in human history, where his voice is having a profound impact. And again, it is not just pointing out the disparities of income or the dispossessed or the unemployed or the poor and what's happening to them. It is reminding us that life simply cannot be about the accumulation of more and more money and turning our backs on the children and the elderly and the poor. That as human beings, to live a good life, we have got to see the suffering that is around us and to try to address that suffering. That makes us happier and better people, and that's what he's reminding us of. He's a very audacious guy. Fearless guy, and he's a very smart guy. And very often, what I say to people who are, criticizing me, I say, "You think I'm radical? Read what this guy is writing. Do you see what he's writing?" It goes a lot deeper, in fact, than the kind of platform that I work around.
The people of God will not be free from suffering, but while persecuted and distressed, while they endure privation and suffer for want of food, they will not be left to perish. That God who cared for Elijah will not pass by one of his self-sacrificing children. He who numbers the hairs of their head will care for them. And in time of famine, they shall be satisfied. While the wicked are dying from hunger and pestilence, angels will shield the righteous and supply their wants. To him that walketh righteously is the promise. Bread shall be given him, his waters shall be sure. When the poor and needy seek water, and there is none, and their tongue faileth for thirst, I, the Lord, will hear them. I, the God of Israel, will not forsake them. Excerpts taken from the book, The Great Controversy.